Hello and welcome to Leviathan News. It is April 24th. We got one more week of this month and things are just starting to kick off. We got some great introduction that we're going to have into EtherFi's brand new card that they released. They're going to have a bank account. We're going to learn all about that. But first, let's talk about our sponsors, which is going to be Frax. We love Frax. We love Fraxel. And you should check out their L2. That's where the squid token is. And you get squid by contributing to the Leviathan ecosystem. And you can do that either through the Telegram or you can come and you can sign up for the newsletter, which we have a bunch of stuff coming out for. And yeah, so anytime you really commit any sort of effort or work into the Leviathan ecosystem, you get some tokens back. All right, let's get the show started. Okay, little technical difficulties. I pressed the wrong button and cut the show intro short. But today we have Mike. Mike, how do I say your last name? It's like Sogadze.
Silagadze.
Silagadze. Is that Italian?
No, it's Georgian.
Georgian. Actually, you know what? You look like my Georgian friend. He's also bald.
Oh,
yeah, and he's got that nice. The thing about the Georgians is the beards are, unlike anywhere else you'll find in the world.
Yeah, it's a standard look.
But no, I love Georgian food. It's one of my favorites. There is really nothing better. And for all my American listeners at home, that have never had Georgian food before, you're really missing out. Like, Georgian food is incredible. It's unbelievably good. It's right at this mixture of all these different cultures. And it's just wonderful. Like I could talk an hour about it, but we probably have more important things to discuss.
It's pretty good, yeah.
Well, cool, Mike. This is your first time coming on the show. We were just chatting beforehand that I had Rock on, who's your partner in crime, almost like 18 months ago. It was October, yeah. So like right around 18 months ago, October of 2023. And man, you guys have changed since then. Like back then, you guys were this like little solo staking project that was just trying to figure out how to allow people to stake ETH and then maybe like generate a token for it as an LSD. And then so much has changed. And here we are in 2025 and you guys are launching a bank.
Not a bank. It's not a bank. It's a DeFi bank. In the sense that we don't take user deposits. It's non-custodial, but it is a new category. I think there's going to be lots of folks that over time enter this this category. But the idea is it's really a bank alternative. It gives you many of the tools that you would normally get from a traditional bank, but in a DeFi kind of flavored way, where it's non-custodial, much lower cost, gives you way more control, higher rewards because it's plugged into DeFi, but lets you do all the normal things you want to do. So wire money, transfer fiat in and out, convert it to crypto, stake it, earn rewards on a deposit in DeFi, and then have a card that lets you use that crypto in your day-to-day life.
Yeah, it's like I think that we're seeing a collapse of all these different financial tools, both on the crypto side and then on the TradFi side. They're finally coming together. We have all the technology now. We have a better regulatory environment now. The banking system is getting a little bit looser when it comes to allowing like crypto interactions. And I think this is the next like multi-billion dollar idea, because there's a lot of cool things that you can do with crypto that you can't do with a bank. And there's a lot of cool stuff that you can do with the bank that we need in our every single day lives that can't live without yet, right? And so if you can mirror,
that's exactly right.
Yeah, and if you merge the two together, it would be the best of both worlds.
Yeah, I think it's in many ways this is the holy grail of DeFi, right? This was the whole idea all along, right? A trustless sort of peer-to-peer system that creates an alternative or a parallel, more fair, more transparent system for users to interact with. I mean, to your point, the technology to make this possible is only recently become available. This is a relatively new thing where gas through the advent of layer twos has become sufficiently cheap where you could do just on-chain transactions every time you buy or spend or do stuff, where effectively transactions can be gasless, where a lot of the cross-chain stuff has been solved to a sufficient degree to make it easy for the user. A lot of the fiat on-ramps, off-ramps have been developed. So all the pieces have only really come into place in the last 6 months to make this possible. And, here we go. This is what we're putting out there. Now, I will say, actually, I mean, believe it or not, this was the vision from the very beginning. It wasn't like we decided to change gears in any way and launch this thing. We've been working towards this exact vision of a DeFi bank for almost a year and a half now. The first product, EtherFi Stake, was really just a way for us to get in the door, to get TV out, to get users, because that was just a large category in DeFi that we could go after. But the vision was since our Series A deck that we presented over a year ago. The vision was to create this end-to-end system. Oh, sorry, I can't hear you.
I'm muted. So, like, what was that I know you guys may have had it in the back of your head, but a lot of the times when you're building products, you have huge demands with what you have product market fit with before you actually can go and do these nice little side quests. Like, what actually precipitated this, that you got to the point in your product development on the LSD or LRT, and that you wanted to make this next big push?
In some ways it was actually a very natural process to go from staking to liquid to cash. If you're first deploying assets into crypto, the sort of simplest thing that you can do, the easiest way for you to earn some rewards on your assets, is through staking. I mean, that's almost the easiest thing that you can do in DeFi. And so that's step one, and just create a really great staking product for, in our case now, ETH, BTC, and USD. So you deposit and you earn kind of the native interest rate of the system that you're participating in. Then the question is, well, great, I've got these assets. What can I do with them? Well, that's where the liquid product comes in. Is instead of you having to manually micromanage your positions and wire up your own financial derivatives and do all this complex stuff, you've got these non-custodial vaults with EtherFi Liquid that automatically deploy it for you into DeFi and earn yields across the ecosystem. And then from there, great, the number go up in your portfolio, in your wallet. What can you do with that? Well, that's where cash comes in. Now you get to connect it to the real world. You could use your assets to borrow against, or actually directly fuel a card that you can then use in real life. So there is kind of this natural progression of the user needs that allowed us to construct this MVP end-to-end solution for customers.
So you guys built the whole thing?
Oh yeah, of course. Yeah, as opposed to.
Well, I know, I'm just trying to figure out like what the process is, right? So like, I put some ETH into my account, right, or this EtherFi account. I put some into the safe, as you guys are calling it, and I want to spend it down. So like, I go to the grocery store, want to buy some eggs for $12 a dozen. Maybe it's a little bit less now, but buy some eggs, and I pull up the card, which is an Apple Pay, and I go and I tap it. Like, what happens then on that whole process? Like, I tap my card, I want to pay with it. What's happening?
Well, so one of two things. There's two modes that you can set your cash safe into. You can set it into borrow mode or direct pay mode. In direct pay mode, it'll just use stables that you have in order to to fund the card, which then directly is used to purchase the thing that you're trying to buy. So that's that's direct payment. You're just effectively you're using the card to pay for stuff in stables. The alternative, which is borrow mode, is the cash safe, which is a smart contract wallet. Borrows stables, versus with your assets as collateral, with your ETH as collateral, and then that borrowed stables are used to fund the card. We have a promotional thing going right now where it's 0% interest, so you can just borrow stables against your ETH at 0% and live your life. And these, of course, can be yield bearing assets that you're borrowing against. So specifically the staked ETH, or staked ETH product, or BTC, or yield bearing USD in the liquid vault.
Yeah. So, but can you walk me through how the credit is taken out of the account? Because just from my understanding of the speed that crypto moves at, it's a little bit slower than the speed that you need to buy stuff with. That trend.
So all the transactions for the safe are done on the scroll layer 2. So it's Ethereum. So it's in the ZK Ethereum layer 2, where transactions are super fast. I think it's like 2-second block times. And gas is very, very cheap, and so that's what allows us to do all the transactions on chain. And because it's ZK, it's almost as secure as you can get as far as layer 2 goes.
No, I think my question was that, like, because when I go to pay with the card, it does it, and then essentially it's going to usually makes like a credit check against the account, like the actual fiat account. But like, how does a fiat account know that it's funded to a certain point? Like, how do you connect that data between what's on the safe and then what you can actually provide as credit for somebody to go buy before you go back and then you adjust the safe? Because I'm sure it doesn't happen like in tandem.
Or no, you're exactly right. Yeah, so we receive an API call that says, "Hey, this user wants to spend $10." It's TradFi. This is the link to TradFi. So that part of it has to be centralized. There's no other way to do it. So we receive a call that says this user wants to spend $10. We go and check, all right, the safe wallet associated with that account, does it have at least $10 in it or enough collateral to be able to borrow stables against in the account? Our system has permission to up to whatever limits you configure on your safe to withdraw stables for spending. And so if in fact it's in good standing, then we withdraw the stables or the appropriate amount relative to the transaction, and then submit a transaction on chain to execute that. So there is this TradFi connection, but you still hold custody over the assets, in that you can withdraw them at any time. I mean, they're not being custodied by us or anybody else. So you're just putting them into a smart contract such that you can then spend those assets.
That's pretty cool. So, like, which assets are supported right now?
So right now we support our liquid staked ETH asset, staked BTC asset, USDC, and a couple of the liquid vaults. So the DeFi strategy vaults. I think the ETH and BTC and USD ones.
Well, that's pretty cool. Am I able to like swap or like convert once the things are in here?
Yeah, you sure can. So you can either swap your USD into ETH or whatever, into staked ETH, or you could just spend the yield bearing liquid vault, the USD vault. So the USD vault, let's say you deposit $10,000 into your safe and say, okay, I want that to be in the liquid USD vault. So now it's earning whatever rate of rewards, 8%, whatever it is these days. And then, you're earning the rewards at all times. And then when you go and spend, it just spends those, those assets.
So like one thing, I just want to bring this back up, right? So here's the UX, right? So there is this difference between like direct pay mode and then borrow mode. And I saw that in there. So like in the borrow mode, I'm guessing this is for people that have like ETH or WETH. Yeah. So
Yeah.
wait, any of these assets. So I mean, this is small. Let me make this a
Mhm.
little bit bigger. So any of these. So like, how do you guys pronounce it? Like we ETH? Yeah.
We ETH. Yeah. I know. Yeah. It's in retrospect, we could have done a better job with naming.
um, and then also the wrapped ETH as well too, and then USD and EBTC, and then scroll. So I'm guessing the primary asset that you want people to use is we ETH, and then once you have that, then you can use borrow mode, which allows you to borrow. So if I was able to have like
Yeah.
$75 of we ETH, I'm using, this is USDC right now, but it says I can borrow up to 67% or 67 point. Oh my gosh, I'm reading in percentage. $67.50. Yeah.
Right. Yeah. So if you had wrapped ETH there, you would be able to borrow USD against it. And those are the two behaviors that we're seeing with the cash, with the safe. Is either people are just spending stables, which is standard and easy to do, or they've got ETH in there and they're borrowing against it. Those are kind of the. I mean, I'm sure we'll see more interesting stuff as we support more assets, and the plan is we'll add hundreds of assets here eventually that you could use. So for now, those are the two behaviors that we're seeing.
It's pretty cool. And is there any interest on the borrow?
So right now, no. That's a promotional thing we're doing for a couple months, I think. It's no interest. Just trying to encourage usage. But eventually, it will be kind of prevailing DeFi interest rates, meaning whatever interest rate you're seeing on Aave, that's more or less what you're likely going to be paying. So it's a lot better in that sense than a card. Traditional credit card where the interest rates are quite
That's
high.
pretty cool. It would be like, we just had on 3Jane a couple of weeks back, and they're not launched yet, but what they're going to be doing is having this like under collateralized. It's not even under collateralized. It's just they monitor all of your accounts, and then they give you a risk score and then you can like borrow USDC out of their pools. And this is also like a nice solution as well too, because here you can, if you have a bunch of ETH and you don't want to sell it, but you do want to spend out of it, you can just borrow against it.
Exactly. Yeah.
But I guess you can be liquidated once you.
And because it's yield bearing, like for staked ETH, you're getting your staking rewards, you're getting your restaking rewards. So it's yield bearing. So you can almost think of it as like the loan and the safe actually pays itself back over time.
And how do you manage liquidations with this?
Same as Aave, so it's automatic. I mean, we have pretty conservative limits, so we don't want people to do anything too degen in here. But it's same as Aave. Aave just sort of, it's an open liquidation option.
And where does the like loan? Is it an actual DeFi loan, or how's that work?
Yeah, it's just a lending market. We haven't deployed the full Aave market yet, but that's the intention. I think that proposal either was already posted or is about to be posted on Aave to put up a dedicated Aave market for this. So it'll be our own specific Aave market where we're going to list all kinds of asset and be able to control the parameters.
So we did have a question. I think this is a good one. So is this only for US markets, or is this going to be in the Euro as well too?
It is available in Europe. Sorry, I should be very careful with the legalese around this is very finicky, so I have to be very careful with how I say this. So hopefully I'm saying it correctly. Europeans are able to sign up. We're not able to solicit Europeans. So forget I said anything. But if you happen to be in certain countries in the EU, you can go to the website and of your own free will, and you will be able to sign up. I think I can say that. But it is available in the US, in LATAM, and quite a few countries. So go check it out. Probably your country is supported. And our goal obviously is to roll out with various partners and eventually globally. The FX rate, it depends on the tier of card that you're in. I believe it's 1% FX rate for US dollar cards, which is the only thing we currently support. Shortly, meaning within a matter of hopefully weeks, maybe a month, we will have euro dollar cards as well. And so if you want your primary asset to be euros and you want to spend euro stables, you'll be able to do that. That's not there yet, but that's coming.
Now that you mention it, can you talk about the membership tiers a bit?
Yeah, so basically, you can think of it as like any card program or airline miles is maybe a good analogy, where the more EtherFi products you use, the more points you earn, and if you earn sufficient number of points in a given amount of time, your membership tier is can be leveled up. For the sake of if you've got $20,000 and that's sitting in the one of the liquid vaults, and maybe you've got some staked ETH, you're earning a certain number of points per day, and if you get up to 50,000 loyalty points per month, you're earning 50,000 loyalty points per month. Then you'd be at the pinnacle level, and you get the 3% cash back and all the other benefits that come along with it.
Wait, how do you know how hard it is to get points? Like, is there a?
Yeah, I think it should be down there. Maybe, maybe not. We're still.
Here it is.
This stuff is
so
work in progress. Oh yeah, there we go. It is down there. So it shows you exactly how many points you're earning for different activities. So if you're staking ETHFi, you're earning a certain number of points. If you've got liquid vaults, you're earning 9 points per day per $1,000 of liquid assets staked. Credit cards, you're earning 3,000 points for every $1,000 of spend. So it's very transparently what it's tied to is how much revenue the protocol generates for given activities. That's how the different point levels are calculated. So if a given activity generates lots of revenue for the protocol, then we want to give you a very high tier, which you can then use to get benefits, to get member benefits.
Yeah, I think you guys are right on track here. I think that every single major protocol, and I don't know if it's, you guys are interesting because you guys are doing it at the protocol level rather than building your own wallet ecosystem. But I think that each,
I mean, in a sense, this is a wallet, but we're not trying to create another like MetaMask or Ravi or whatever. It's that first of all, there's lots of solutions for that. You don't need us to give you that. This is really meant to be a smart contract wallet that is much more bubble wrapped. Like it's not you sign a wrong transaction and all your money is gone. Like that's physically impossible with this system. It's really meant for normal people that just want to live their life. They don't want to be sitting there like terrified every time they take an action. It is non-custodial, so everything is passkey encrypted, so you effectively have control of your keys. You can set social recovery, so if you want to assign a bunch of entities that can help you recover in the case you lose your keys, that's there. Certain DeFi strategies are enabled for you, but it's not going to be a general purpose, go to some sketchy website, connect your wallet to a DApp and, pray that you're not going to get rugged. It's like bubble wrapped. So that's, it's meant to be something that you're actually comfortable using, day to day without being an expert.
Yeah. So I think my point that I was making is that the pretty much everybody's going to be incentivized to launch these types of products. And it makes sense, right? Because if you can get people into your ecosystem, you generate a lot more revenue, right? Because they're using your products, they're paying your fees, they're within your kind of little scope of what you called it, right? Like you can provide them a nice little place that they can buy some EtherFi ETH. They can get into some of these liquid strategies that you have as well too. And then you start to bolt on a bunch of other features. Like I think I saw today that you guys added a little a thing when you're trying to like add funds to your account for like wire transfers coming soon. So you can just start adding this. Maybe it's direct deposit into USDC at some point, and then really just expand that product offering. So it becomes more, and then it's just really like, okay, we already have $4 billion worth of ETH in our protocol. This is like a nice service that we can add on top, because the LSD LRT game is really similar to the stablecoin game in that stablecoins are doing this really fast now. If that the fees to have these stablecoins, they're going to go to zero collected for these companies.
Right.
All that interest income has to be passed back either to the institutional clients or the companies or the users themselves. Just so it's going to be a race to the bottom in fees. And that means that the next wave of innovation in any of these products is going to be the services that are built on top. And this is one of them.
Yeah, you got it. 100%. Yeah, I mean, look, I think it is a lucrative market because DeFi users are very valuable. They tend to have more, more assets than the average person. So I think we can generate a phenomenal business here, but that business is still going to be 10 times cheaper for users than a TradFi service because we're able to operate with much fewer headcount because we get a lot of stuff for free from building on Ethereum, and we're able to pass those savings on to the users. So although I think we can build a really phenomenal protocol with lots of revenues and margins on this, in the end it's a win-win because users actually get a product that's an order of magnitude cheaper than they would otherwise get. Again, comparing it to other cards where you're paying 3% or 5% on FX, and you've got all kinds of hidden fees and gotchas that end up costing you a ton of money and not giving you a lot of rewards. In this case, it's just a much more transparent, better product.
So how do you plan to bring this to users, and what's the scaling process looking like?
Yeah, so I mean, step one is I think we need to go bring this to DeFi users. I think that's the most obvious place where there's product market fit. Those are the most fanatical users that need this because there are not great alternatives available out there. And so partnerships and influencers and all the usual stuff that you use to get products out there. DeFi, and building on the fact that EtherFi already has a pretty strong brand out there. Once we get a base of users there, which is, let's call it on the order of a few 100,000 users, then we plan to expand our offering and focus more on crypto users who are primarily CeFi users. So maybe people that are mostly on exchanges. And that takes our addressable market to maybe 1 to 200 million potential users, and we can then scale up to let's say 5 or 10 million customers. And that is that already is a very, very large business. So once we get there, once we do that, then we go after the normies.
So I've talked with the guys at Fold, some of the other card providers. Like, I think the Fold guys have done a great job. And I was looking through your site today, and like the one thing that I would want to highlight is that taking a look at the cash back, right? Which is a lot of the reason like why we use these products in the first place, is that like I'm either a Bitcoin person, or if I'm using EtherFi ETH, like I'm an ETH person, but the stuff that you're giving back to me is Scroll, like a token which is not ETH, for an ETH ecosystem product. Like I would rather get back ETH. I don't know what kind of deals you guys got with the Scroll team to provide this cash back, but like I want to get back more ETH. I want to spend dollars, get back more ETH.
Well, yeah, that's fair. I mean, look, I'll say two things. One, the Scroll has very high ETH beta. If anything, it's probably levered ETH. You could almost think of it as that. If ETH is up 10%, Scroll is probably going to be up 20%. No, not financial advice. So it's close enough. But look, if you really want to, you can swap your Scroll to ETH, right, in the wallet. That's but we have a great partnership with the Scroll. We're huge fans of the team. We think it's a great layer 2, and this is why we're building on it. So that's why the rewards are paid in Scroll, but users do have options.
I mean, it just kind of it kind of breaks the brand a little bit, because like if I signed up for this, you have your like EtherFi stuff all over it, and then I get Scroll back, which you have to go through the whole process of like swapping and stuff. I think like what made Fold such a great product, and like the reason I signed up for it in the first place, because their whole thing was like Bitcoin rewards. right? Spend
Hmm.
cash and we'll give you Bitcoin, which is like such a great
Hmm.
thing to
It's great
yeah.
marketing. Yeah, I don't
Yeah.
disagree.
I want to spend cash and get EtherFi, Mike.
ETH. I mean, I think we'll get there. Yeah, we'll probably be doing all kinds of crazy promotions and supplementing stuff with ETHFi. That I can almost guarantee that'll
Yeah.
happen.
Um, so does this have its own product team? Like, is this its own, like, or will you split this off into its own little thing? Like, how does it fit in with the broader?
No, this is the thing. This is as you can see on the sort of left-hand menu. I mean, this is stake, liquid, and cash, and like that's the offer. This DeFi bank is this app. The safe is your smart contract wallet, and within that wallet, you can do all this, all this great stuff. I mean, you could still use stake and liquid independently if you want, of course. But there's the whole point of this is an integrated experience. We don't have the iOS app just yet, but that's like a week and a half away. And so you have a nice. I mean, if you use Revolut or Nubank or Chime or whatever, we want to asymptotically converge to that level of polish and feel. You download the app, you sign up. Within 3 to 6 months, someone downloading our app, signing up, and going through the process won't even really know or care that it's crypto. Like they won't need to care that it's crypto. They sign up to a thing. They can deposit their money from their bank or whatever, and they start. They get a great financial, fintech product. They get the ability to earn, interest. They get to deploy their assets in various ways with one tap. While retaining custody. They get a card with great rewards. Just it's going to feel great. It's going to just feel like a nice, modern, elegant fintech product with just better rewards and lower fees. So that's the idea. I mean, that's where as I said, that's kind of like the holy grail is you use DeFi, you don't care that it's DeFi. You don't care what chain you're on. You don't care any of the crypto nonsense with seed phrases and hardware wallets. It just works and it's safe and it's easy.
Yeah, and I would say that as an American, like, we don't have a ton of these products yet. Like, there's not these type of crypto integrations for pay cards. I mean, there's a few, but none of them are great,
Hmm.
and none of them really have that kind of like DeFi flavor in it. So I think this is,
Yeah,
yeah,
I agree.
it's pretty
Yeah,
cool. I'm gonna go. I'm actually, when we're done here, I'm gonna go to the store. I'm gonna buy some groceries with the virtual card. Um,
sweet. Yeah, let me know how it goes.
I threw some money on it so I could go and buy some
Nice.
eggs. Um,
Yeah, I probably use it for 70% of my, quote unquote banking, not banking. Once we have wire transfers integrated and a couple other features, I think I'll be able to go full, all EtherFi.
Sweet.
And hopefully other people too. And we also have the other thing worth mentioning is we also, I mean, we've been working on this kind of in the background for a while. So we actually also built a corporate
Hmm.
card product. So if you have a business, you can sign your business up for EtherFi Cash and then issue cards to your employees anywhere in the world because it's business cards. So it doesn't matter where the employees or contractors are based. You can have custom limits, expense policies, reporting, integration into your QuickBooks or whatever accounting system you use. It really is. It's basically almost like a corporate credit and treasury management product, and that's available today
That's pretty
as
cool.
well.
I wonder if we could use that for our Leviathan stuff. I mean, we have we have a bank account, but like, I think we will move in the future. Is what we.
Yeah, so this is the corporate product is perfect for companies that have substantial crypto
Mhm.
treasuries. If you either just want to keep your assets, your treasury on chain, which we do as EtherFi, almost all of our assets are on chain, or that's just how you raise your money in ETH, or you've got a big treasury in your own token in ETH and stables. This you really have no ability to get traditional banking services or cards based on that. What you need to do is play the dance of on ramping, off ramping. It's a huge pain and costs a ton of money, and you usually have a lot of idle assets as a result. With this, you can just use your crypto treasury to operate your business. So there's on the order of 5 to 10,000 crypto businesses with meaningful crypto treasuries. That this is and obviously that number is going to be growing. and this is a perfect fit for
You
them.
guys going to be launching a stablecoin soon?
We actually already have a stablecoin. It's called
Oh yeah.
EUSD. Hilariously, it's not available in the cash safe yet for a bunch of different reasons. It will be soon. We actually do have a stablecoin. It's going to be backed by effectively by T-bills. So yeah, so we actually do have our own stablecoin. We're not trying to get that particular asset, at least for now, into DeFi and like into all the degen games, because frankly, our market is too crowded. But having a very simple, boring, safe stable coin that just gives you T-bill rewards is something users want, and so we're gonna make that super easy
Well,
for
I
people.
was going to say the loan market that you provide all these loans in. Is it USD? Is it USD or
Yeah.
is it USDC?
The loans are in USDC. Yeah, they wouldn't be in the yield bearing. Yeah, that would be.
Yeah.
Yeah.
Well, I mean, you could have like a non-yield bearing version that you provide the loans in, so that like when the loans are taken, the interest income.
Well, you don't think about the loan is like, you can almost think of the loan as being in
Right.
dollars. Like you don't care what stable the loan happens to be in. But maybe this is what you're getting at. Um, in the background, like it's a decent, it'll be an Aave instance, so people will be able to supply the stable coin, earn the yield on the supply plus the borrower rates. But then the spend is happening in a non-yield bearing
Yeah,
version.
I think what I was trying to say is that you guys should just own the whole stack. Like if you're going to have the wallet plus the LSD, you have a stable coin. Maybe there's a yield bearing, non-yield bearing one. Like provide the
Mhm.
loans yourself so that you can capture the interest on the yield bearing token, or have some sort of setup with it as well too. Uh,
There is an element of that where the liquid vault will be one of the suppliers of liquidity to the market, our liquid USD strategy vault. So yeah, then that way, effectively, the fees are fed back to our users. But we want this to be actually decentralized. So it is going to be open to anybody that could come in and wants to provide loans into the market.
So I want to shift gears a little bit. 2 days ago, I posted that it's just like the vibes felt as if we have bottomed against Bitcoin. It's been really bad these past couple of months.
Hmm.
The Solana guys are just gloating beyond belief.
Hmm.
Uh,
Yeah.
I get on crypto Twitter and some days it didn't feel great. And so yes, like 2 days ago, the vibes were just epically bad. Max, who switched over from ETH to Solana, was on a soapbox talking about how ETH was so bad.
Hmm.
And it's like, you know what? ETH isn't that bad. Vitalik is out here still doing work. Our ecosystem is great. Like, sure, we might have to put some tariffs on the L2s and, start a trade war with them. But like ETH as a product is still good. And it's, it's time for a resurgence. So like, what's your view as someone who runs a ETH LSD? Like, where's ETH going in 2025? Are we done or are we coming back?
I mean, I'm obviously ever the optimist. I'm willing to stick my neck out and say that we have bottomed. I think there's a lot of upside, and we're also seeing macro level. The administration has changed their tune. I think they've pretty much given up on this tariffs thing. They're going to do some version of QE. Maybe it's probably not going to be precisely QE, but it's going to be some version of pumping more liquidity into the system. And so maybe these treasury buybacks, whatever mechanism it is, I do think there's reason to be optimistic that prices are going to start moving up again. And I think the sentiment is certainly hit rock bottom. I'm super excited about what both the new Ethereum Foundation leadership is doing, what Etherealize is doing. I mean, I think there's a lot of people doing what I think are exactly the right things. So I'm super bullish. I think there's a lot of exciting stuff that's happening. And look, I mean, hopefully we can help with that. If we're successful and over the next couple of years we get a few million people using Ethereum every day as just their default financial services platform. That I mean that's a proof point. That'll be I think that'll actually majorly validate Ethereum as the ecosystem to bet
Do you
on.
guys get any input in what the EF is doing? Did they reach out to you at all?
Yeah, actually they did. Yeah, the new leadership is has been great. They've done a good job reaching out. I've had lots of conversations with folks. They retweeted our announcement today, which was great. So yeah, I think they're
Yeah.
awesome.
So just, we're talking about, if anybody doesn't know, like this chart has been really the bane of everyone's sad.
Sad.
Yeah.
Look, that little green
Yes.
candle,
But
just tiny.
but look at this one. Yeah, exactly. Like look at this little green candle at the end. I didn't even
Yeah.
this when I tweeted like 2 days ago at the bottom, I was like, this just can't. I'm doing the math in my head, right? So it's all about ratios. And let's think about like the worst thing that Bitcoin can, or the worst thing that ETH could do. It could probably go down to 1200 or 1100, and Bitcoin could go
Hmm.
to 120. And if that happens, I mean, we're talking about like a 30% collapse down to like zero point 0.1. And this is what got me in trouble back in
Hmm.
2018, was that I was looking at Bitcoin at like 3,700 and saying, okay, it's going to go down below 2000, or go down below 3000 into the 2000s. I should just like wait a little bit more. And at that point, I really didn't do the math that like the downside that I'm talking about is like a 30% downside versus like all the way back up to 20,000, which is like multiples, like 7x multiple at that point.
Hmm.
And that's where I think we are with ETH, is that, like ETH can't go that much lower. I mean, sure it could, but like the ratio is not going to get that much worse. So if you're like swapping from being bullish Bitcoin to bullish ETH, especially on the ratio, now's the time, because if we've gone so far that there has to be some sort of regression back to the average. Yeah.
Hmm. Yeah, and look, I think it comes down to catalysts. I think Bitcoin have had so many strong catalysts, right? It seems very clear now that Bitcoin is becoming this sort of geopolitical tool where countries are using it as a defensive measure, or will potentially be using it as a defensive measure against U.S. dollar dominance, and setting up, at least some of them setting up reserves in the same way that they have gold reserves. And then obviously you have Trump and the promise of the Bitcoin reserve and the in the U.S. So there's so many strong catalysts. For now, nobody's doing that with ETH. Um, but I think ETH has other catalysts. Again, ETH, it has the advantage of actually being a productive asset, and have an ecosystem of products and services that people are using. So I think it's just the catalysts for Bitcoin have been much stronger. It's not that I don't actually even think that Ethereum has done anything dramatically different or wrong. It's one could maybe argue they could have done a better job of moving faster and doing a better job of advocacy and education. But I actually think that the delta is more around the fact that Bitcoin has been so strong, not that Ethereum necessarily has been
That's
particularly
probably,
weak.
yeah, I would agree with you. Ethereum just needs its own Michael Saylor, who's out like raising billions of dollars to put into a treasury forever.
I don't know that we want a Michael Saylor on Ethereum. That's like a kamikaze trade. It works until it all goes to hell. So I don't know.
I just want to get one more thought out of you, is that are we at the are we at the bottom for eigenlayer narrative? Like they've kind of, that was the narrative of 2024, right? That's what got you guys into the limelight. Uh, have carried you to a multi-billion-dollar TVL, and here we are in 2025. Kind of the veneer of, oh, eigenlayer is going to be awesome is kind of worn off. They have a token out now, and that's probably why a lot of the steam has been lost in it. But are you still buying property on Eigenlayer Island?
That's an interesting way to put it. Look, I think Eigenlayer. I don't want to speak for them, but here's what I would say. The only thing that, and I think they would agree with this, the only thing that actually matters is AVSs, restaking networks that have real customers, revenues, and provide rewards for security and effectively, civil resistance and node operation services. So that's the only thing that matters. Everything else, all the narrative hype stuff, like, yeah, you can get a pump out of that in the short term, but like, to me at least, that just doesn't matter. I don't care what happens over a 1 month, even 6 month or 1 year time horizon. I care about long term. Does this make sense? Is this going to exist in 10 years? My view is for sure Eigenlayer is going to exist in 10 years. And I think it is, we're at the sort of like the bottom probably of like that Gartner adoption cycle where like there's the hype and then it kind of collapses and then there's the slow build over time once stuff becomes real. I think that's where we're at. And I think there's lots of really cool stuff being built on Eigenlayer. They just turned on slashing, which is I think a major milestone. And there's some really cool networks. The pre-confirmation networks, the ZK compute processors, ZKTLS. I mean, all of this is like techie nerd snipey stuff, but it's actually really cool. I think I think there's a whole world of possibilities there in terms of things that people can build, and lots of smart people are building stuff
Yeah.
on it. And so, yeah, I'm still super bullish on. I can't tell you the time horizon, but I think it's
funny how these narrative cycles go. If you look back specifically at like all the LSD narratives that we've seen, the Eigenlayer, Steth is getting too much dominance. We have to figure out how we can like slash or penalize them. Like what completely got me off guard coming into 2024 was actually like the rise of you guys and your other competitors in the LRT space. When because at that point I was like, oh, okay, like the LSDs at that time in 2023, late 2023, they seem to have captured like all the market share. It felt really competitive at that point, and we didn't really know how.
Oh yeah, there was Lido
Yeah.
basically, and nobody else. But what was happening was proof of stake there was going to be the merge, and that created a lot of excitement and buzz around staking, and that was like the way, because nobody knew. We were pitching restaking even in our seed round, but nobody like knew what that was at that time. So it was just sort of like esoteric and weird. So really, we raised our seed round off the back of the fact that I think we had a team with a track record and that carried some credibility, but also it was just like staking was really hot because of the merge happening. So that was the first wave, and then restaking just went bananas, and that was the next wave, which again very predictably has cooled off because like of course it was going to cool off. Like what? It's just going to go to infinity forever? Like no. It was the most predictable thing in the world.
But now we have a much more competitive LSD space where it's not just
Correct.
Lido with 80 to 90% of the market share and then Rocket Pool and Frax. Now it's you guys and Renzo and like a ton of other ones out there who are all competing. And I think it's good. Like it's good that Lido's kind of been put on the back foot and said that, okay, like, yes, you are the giant. Yes, you are the incumbent, but there are hungry, scrappy competitors out there that are going to work even harder than what you're doing to go for TVL. And it's not just going to be one; it's going to be a bunch. And this staking and restaking space is going to get super competitive.
I 100% agree. Yeah, I mean, I don't view staking as a standalone product as viable long term. So I think that is something that I mean everybody, including Lido, has to think about. Like for example, I mean right now, if I'm not mistaken, I think it's like Lido, us, Coinbase, and then a lot of distance between the next players. So Coinbase is not like a staking company. Right, like staking is just one of like 1,000 things Coinbase provides. For us, our staking product is again one of a platform of a dozen different things that we now do as part of like a broader fintech offering. So I don't think staking makes sense. It's very low margin, so I think the margins there also eventually go to zero or close to it. And as I said, it really only makes sense as part of like a packaged offering of like many things. But then again, liquid staking has been incredibly sticky. It's been the stickiest thing as far as like deposits and customers out of any other category in DeFi. So that A, I may be wrong. B, maybe it takes 5 years to play out. But in and of itself, I mean, there's other things involved there. But I mean, Lido, even at their scale, is not profitable, which is just kind of remarkable when you think about it. Like, it's okay, they have like 30% staking market share. I mean, it's massive, and still it's not profitable because, again, staking in and of itself is just not that great a business. And for us, I mean, half our revenue comes off of our liquid product, and shortly, I think it's actually going to be majority coming out of the cash product. So, I just don't think long term staking in and of itself is viable.
I mean, it's just the margins on the LSDs are small. For anybody out there, like, it doesn't really make sense to run an LSD with less than $1 billion.
That's probably right. Yeah,
because I don't want to go into the math, but it's like you're taking a percentage of the income that people are making, so it's like 3 to 4% right now, and you're getting 10% of that. So it's 5%, even less. So
it's like $2 million on the $1 billion is what you're making. And the real question to ask is, if your revenue is $2 million, like, do you have enough money to do the level of security stuff that you need to do to actually make sure that the project is robust? The answer is probably no. You probably need more like $10 million. So that's where, like, it's probably like 10x that actually. Where you need,
and that's why you have apps like this coming, and probably other services that are going to be bolted on down the road, because that's, again, like, that's what banks don't make their money from treasury income, right? They make their money from services and other fees that are associated on top. So,
but even treasury income is like 1.5 orders of magnitude greater than staking revenues, right? Because if a bank, whatever their net interest margin is, it's a hell of a lot more than 20 basis points.
Well, you guys are on the right track. I'm gonna go buy some groceries here with the card. And
Nice.
Anybody that's watching at home, we actually have a link that you guys can use. I'm gonna put that in.
You have a referral code?
Rock gave me.
Sweet. Yeah, there we go.
I need to make sure that he gave it to me. I asked him if you actually, you know what? He didn't give it to me. I'm gonna have to go bug him again.
Okay. Yeah, no, post the referral code. It's gonna be fun. We're gonna do all kinds of crazy gamification on this stuff. So stand by. We're gonna make, like, using your credit card fun.
Well, cool, Mike. I appreciate you being here today. It was great to hear and chat about this new product. I love this type of connection that you can actually use your DeFi assets in the real world. And I'm going to be looking forward to seeing how this rolls out. And you mentioned an app, which is coming next week, so it'll be on my phone.
Yeah, I don't know if it's exactly 1 to 2 weeks away. So very, very soon.
Before the end of Q2.
No, before the end of April. Like, it's coming. It's coming.
Well, that's 6 days. So by Wednesday next.
I guess that's true. Yeah,
2 weeks.
Okay. We actually have an internal bonus tied to shipping this app on time. So we so I think the devs will make that.
Well, that's awesome. It's great to have you here for the first time. Welcome to come back anytime you have any updates or you want to talk about LSDs. I know that with everything happening in ETH world, there's going to be a lot of Ethereum stuff to talk about. That's not like L2s or other stuff. So excited that this is going to be like Ethereum summer again.
Yeah, I hope so. I think it'll happen.
Awesome. Thanks so much for being here today. And everybody that's tuning in at home, you can find us at Leviathan_news and follow us on Spotify and Apple for your podcasts. You can sign up there and then also sign up for a newsletter. We'll send out all the information about this later on today, and we will see you tomorrow for a llama party with Garrett. So yeah, thanks everybody. We'll see you tomorrow.